Action stations.
So Craig, why is understanding the numbers so important in business?
It's a well-known fact that over 50% of FTSE chief executives have a financial background, whether it's they're from the banking industry or they're accountants. And there's a really good reason for that. You need to really understand the numbers, whether you are a FTSE chief executive or a manager of a department. And there's a saying that goes, turnover is vanity, profit is sanity, and cash is reality. Now, a lot of people understand what sales means. It's the main focus of many businesses, sell, sell, sell. But if you're selling things without actually making a profit and then not bothering to think about the cash, you're definitely going to not be around for a long time. So it's always important to just have a really basic understanding of why the numbers are important in any leadership role.
Okay, and what level of financial understanding is required?
It doesn't need to be great. It really depends on your position, but for a departmental manager in a marketing department, then it may simply be about understanding the difference between sales and profit, and understand the impact of cash and the importance of it.
But isn't that fairly self-explanatory?
Well, you'd think so, and profit in its simplest element is very simple. So, for example, you might have a product that you buy for £100 and you sell for £150. Your profit would be £50. But then consider what the delivery costs might be involved in that, and you've got to cover also overheads. It sometimes can be quite difficult to get to the bottom of that. And making sure that you have a good perspective on that when you're making important decisions is crucial.
Okay, and from a manager's point of view, how would financial literacy help the managers?
Well, there's a number of levels. Firstly, on a very simple level, most managers have a budget to manage. So managing their cash and their costs within their department are very important, and budgeting and planning for that is important for their own performance in the department, but also their career development. They will be considered good leaders if they're able to manage that effectively.
Okay, and just so we're clear, what do we mean by break even?
Break even it's really about an investment decision. So, for example, if we were to look at buying a machine that might be worth £500, cost £500, and it was going to save us £1 for every unit that we produced, it would take us to produce 500 units before we would break even on the cost of the investment. Very simple approach to investment decisions.
Okay, that makes sense. And what does return on investment mean?
Return on investment is looking at, let's go back to that example, a machine that costs £500. If we were to be looking to produce 750 units from it, it would be a return of £250 on the £500 investment, so 50% return on investment. It's a very simple measure of the success of an investment decision.
Okay, and you mentioned cash before. How does that fit in?
Well, cash actually is, people talk about cash being king. It is one of the things that puts more businesses to the wall than anything else. It is the key driver. If you don't get control of your cash, your business can go under. Now, a lot of people think that is simply a matter of not selling enough. Yes, that's one reason, but there are many more. You need to be thinking, if you're growing very fast, it's very difficult to fund that growth. So you may need to be increasing your stock levels to be able to deliver to your customers. You may be able to be needing to spend more on marketing, but remembering that you're not going to be getting the cash in till later on, that creates quite a large cash demand. So whether you are in a logistics business and you're looking to upgrade all of your warehousing facilities, or in a marketing role where you're looking to improve your return and sales levels, there may well be a significant cash involvement, even though those things might be a profitable decision.
Okay, so we've got break-even point, we've got return on investment, we've got cash. What else do leaders and managers need to know about the numbers?
The financial statements are really what tells us how an organisation is performing. So your profit or loss, and your balance sheet. Now the profit and loss shows you what the performance has been over a period of time and your profitability. The balance sheet tells us the value of our assets and liabilities, so what is owed to us or we own and what we owe as a business. That determines our cash flow. So balance sheets obviously often get forgotten and are misunderstood by a lot of people. They are very, very important, almost as important as profit and loss. A lot of accountants may well say a lot more.
Okay, so in summary?
In summary, knowing the numbers is important right from the beginning of your career of management. Having a simple and basic understanding of the key financial statements, understanding the concepts of profitability and the importance of cash really will give you a really great foundation for becoming a leader and manager going forward.
And cut!